just turned $50 into over $3,500 in 21 days trading this exact future strategy I'm gonna show you. And it only took me 60 minutes every morning. Over the years trading futures, I have discovered 3 specific times in the markets where they are very likely to give a profitable reversal that you can capture every day. Check out this chart from today where the market at my time opens up at 7:30, which is 9:30 Eastern Standard Time. And so the market I'm looking at here is the S&P 500 futures on a 1-minute chart. You can trade this on pretty much any major stock market index. We'll follow a lot of these reversal patterns. And so once the market opens here, the first reversal timing I have noticed that consistently happens is 15 minutes after the market opens. You can see here at 7:45, 15 minutes after the market opens, my time is it pretty much bottoms 1 or 2 candlesticks afterwards. And then from there, it has a good bounce. It gives back this opening move and it comes up to this area and it hits that second market reversal timing of 8 o'clock, where it hits 8 o'clock, which a lot of times some news can come out, or it's just, again, it's that opening swing of the market kind of just whipsawing people back and forth. This is a lot of the reason why these market openings and reversal timings happen and work, is because the market likes to whipsaw when it opens. And so it pops up here, 8 o'clock happens, and it reverses. Now the third timing is about an hour and a half after the market open, which is 9 o'clock my time or 11 o'clock normal Eastern Standard Market time. Now you can see here, it didn't really reverse the market here. It had a little bit of a bounce, but at this point, a lot of the time, come this time, if the market's trending for the day, it's gonna continue trending. So this timing isn't as powerful as the first two. And you can see it kind of blew past that before it eventually reversed at some other time. And so that's a big key with this, is if I actually look at just the previous day before as well, is these aren't always going to work every time. Look at this day, this is yesterday. Market opens up at 7:30, and you can see in the first 30 minutes here, it does absolutely nothing. It's extremely choppy, and so in this instance, you don't see any movement. It's unlikely for the market to reverse, and so you don't want to try and take a trade. You don't want to just blindly be trading at these times, but then you can see it eventually starts to move higher here. And if we look at 9 o'clock, that reversal timing is pretty much when it broke this consolidation that it had and had a clean reversal down. And so that's where, you know, sometimes the later timing can come into play really well. And so when it comes to trading the futures markets, the NASDAQ, the ES, these timings are extremely powerful for day trading in the morning, because what you can do, I'll show you in a minute, is you can take a trade off of one of these levels, risk, you know, a small amount, however much you're wanting to risk, get 2 times your risk, essentially double your money, and you can move on with the day, and you can be done with trading in the first hour of the market open pretty consistently. Now, the most important thing when it comes to looking for these trades and knowing whether, okay, is it gonna bounce here, or is it just going to kind of fail and continue lower, is it at a key spot where the big picture is actually likely to reverse. That's why you don't want to just blindly be reversing at these times. You want the market to have movement first off, because, you know, the previous day you don't want to be trading in that crazy chop where it just does nothing, but also you want to see the market at a key area where you think it's likely to reverse. And so this is a reversal zone that I drew from the previous day, and you can see this, the previous day essentially had a swing high here, some swing highs here, and the market actually closed here and made a gap, which is also can create a resistance or support level. And so I kind of drew that across and said, hey, I think when the market maybe retests this, it could have a bounce. And so seeing that align up with this timing, then it has a high chance to reverse. Now, if you want a comprehensive guide on the 5 things I look for every time I draw a major support or resistance reversal zone like one of these, you can download this PDF guide that I have created for free that will give you a step-by-step process of what to look for every time, so you can identify where the major areas of reversal are versus where it's likely to, just blow through that level, and you can save your money and not enter into a trade. So that's really valuable resource to get for this. Now I want to pull up a real example of a trade I took using this strategy that looks very similar to what we were just looking at, and using this timing. And so what we're looking at here is actually a 1-minute chart of the NASDAQ futures now. Again, you can trade this on either. A lot of the times these markets mirror each other. The reason why I trade one over the other is I like to go with which one has better volatility, because volatility is good for trading, especially reversals. And so in this case, you can see at 7:30 my time, which is the US market opens here and just immediately, pretty quickly reverses or continues to move lower. It does it pretty aggressively in a fast-paced way. And so for me, what I see that is, okay, that first keys me into, hey, we got good movement. And when there's good movement like this, it makes it likely to actually reverse. And so when it comes to 7:45 right here, I'm looking at, okay, does it look like it's going to reverse yet? Is there a reason for me to think that? Are we at a key level? It's not there yet, actually, because at 7:45 the price was right here. It's not at a support zone yet. Another key thing is I like to look at, okay, what's the current trend? And in this case, it was sticking to this downtrend. It hadn't shown that it had clearly broken that yet. And so in that case, I stayed away and let the market continue lower. And so as the market started to make a double bottom here, it eventually broke this downtrend. And really the second step in my major checklist that I use to get into every trade, it's really important to have a consistent plan that you follow every time when you're trading, because it allows you to consistently repeat it over time. If you're just blindly following or reacting to what the market's doing and go with what you kind of think is going to happen, you're likely to have inconsistent trading results over time. I found that I became profitable when I started consistently just looking at these timings every morning, but also sticking to kind of the same style every morning and just looking and waiting for the market to have one of these patterns show up. I don't take a trade necessarily every morning, but when I do take trades, they're highly consistent. And so the last couple things here is when the market made this big move down here, this big red candlestick, and then had two strong green candlesticks here, that showed me that this was almost essentially a final push lower that is now starting to fail. Because of how reversals work a lot of the time is they'll have a good consistent downtrend, but when that downtrend actually breaks, two things can happen. It can either just reverse right away, or it'll make an attempt to keep going lower here, which will fail, and it will reverse and it will start a uptrend. And so that's when I essentially jumped in on a trade right here. I'm actually just going to quickly zoom back in this recording just to show you, really walk you through the nuts and bolts of entering in on these trades in this futures market. And so how I do it is every time I look to enter in on a trade, I want to wait for that last confirmation. And so that last confirmation is, for me in this trade, was seeing these two candlesticks, and then I wanted to see how the market reacted to that. Because sometimes I've seen it where it's come up and touched essentially the previous high of where this big bearish candlestick was, and then just continued lower. And so for me, I'm seeing, okay, well, it's had this bear candlestick, which is, it's come up, and then that bear candlestick is showing it's trying to go lower again. And then this green candlestick that's forming right now that just finished, it's showing that it's breaking above that previous high. So I just enter in essentially above the break of this high. And so that for me is a good momentum play versus getting in on a limit order. And so that's what's really important about trading futures and trading in general, is your entry and how you specifically enter. And I've always found it to be more beneficial to not try and enter in on a limit order, let's say down here, or trying to enter in on a small pullback, because those are really hard to gauge. And also a lot of the times is if you try and enter in on this little pullback right here, well, it could just be you're entering in on, when it continues the downtrend. I find when I enter in on a stop market order or a break above a previous high is you're entering in when that pullback has already happened and the momentum is in your direction. And because a lot of these reversals, and I like to enter in when there's a lot of volatility, when the momentum switches like this, even if maybe your entry price is a little worse in terms of entering in up here versus entering in down here, if the move's gonna go all the way up here, it's still a great move to capture. The whole idea with trading is you're capturing most of the move. You don't need to be capturing all of the move. Like for instance, this chart right here we were looking at earlier is entering in here. I would enter in on a break above this candlestick. And every time I do, I actually use a tool that I've created for NinjaTrader that really helps with futures markets because it allows you to say, hey, I want to risk, let's say $725 in a trade or roughly around $700. And it allows me to say, okay, if I want to risk roughly $700 every trade and my entry is here and my stop loss is here, how many contracts do I need to trade? And that's a hard part about when you start trading futures is figuring out how much to risk, especially if you move this around and the risk changes, but it allows you to target roughly the same amount every time. And it doesn't grossly over exaggerate how much you're trading. And then of course you can see your targets here. And I like to go for roughly generally 2 times or 3 times my risk. That's a good sweet spot for trading is when you enter in is going for that because you don't have to be right every time and allows you to take only the best trades and capture good profitable wins from them. And so to show you how this trade played out is I jumped in, put my stop loss below this big candlestick here because I felt that, hey, I think if it comes down here again, it's likely to just continue lower and I want to get out. And the downtrend is, even though it's broken this downtrend here, that doesn't mean the downtrend's over. It could just be shifting, to a not as strong or directional of a downtrend. It's more of a healthier downtrend with pullbacks. And so at that point though, I roughly up here is about that 2 times profit limit order. And so you can see here, I'm trading 6 contracts because that's what that tool essentially told me to do based on risking about, I think it was actually, I was only risking about $500 on this trade. A little smaller size than my normal, but because the market was pretty crazy this day, and so I was risking a smaller amount. But because there's a high volatility, even though I'm risking a smaller amount, if the market moves in my favor pretty far, I can still get a really nice, big, profitable win. And so as this shoots up here, what I'm looking at is, okay, is there a uptrend here that it's, if it breaks that, I might want to consider getting out because same thing with, taking the reversals over here. If this uptrend breaks, I think it's likely to reverse. And so my initial target here is, you can see I have a resistance zone drawn up here. So that's what I like to use for targets as well. Working through these trades is ping-ponging between essentially major resistance and support zones. I drew kind of an interesting box here, and what I'm looking for with this box is I'm thinking, hey, I think the market's had a nice breakout up here, but I think it could, even if it breaks this uptrend that I have drawn, I think it could pull back somewhere into this support zone because this is where there were some previous highs. You gotta give the market wiggle room when it starts to work out in your favor because otherwise it's very easy for you to manage it too quickly and get out too early. That's a really hard part about trading as well, is jumping into these trades and having this risk and dollar amount on the screen and holding off and not doing anything. You want to have a plan going into managing your trades too of, okay, when am I going to move my stop loss to break even? When am I going to get out of the trade? I roughly change it between each trade based on what I'm seeing, but I have, let's say, a rough flow chart of like, if it does this, I'll do this. Or if it does that, I'll do this. And you can see here at this point, I've moved to break even because we're pretty close to 3 times my risk here, I think. Maybe 2 times, but it's moved up to where I'm starting to think, okay, it's likely it's gonna start to slow down. And so at that point, I break this up because my thought is, and I don't recommend doing this right away, is I wanna take off half of my trade if it breaks this tight uptrend here. So it closes out pretty much half of this trade right here at an aggressive stop loss. I think it closed about $700. And then at this point, I'm also thinking, hey, it could start to slow down here. There is kind of an uptrend, but this is a nice pullback with a retest, strong bullish candlestick. And so I think if it's going to keep going higher, it's going to keep going higher. And if it comes and breaks this new swing low it made, I'm happy to get out, and I'll close out at about $1,500. Now, if you're just starting out with trading futures, I highly recommend getting this trading platform. It's called NinjaTrader. You can get it in the link in the description below or this QR code. And if you want an even more deeper dive into this strategy where I really go through more nuts and bolts and details, check out this video right here.